Hi, morning, everybody. Thanks for joining us today for our webinar following the autumn statement yesterday. I'm pleased to be joined by my business partner, Mark Barrett, this morning.
Morning.
As hopefully everyone knows, my name's Dan. So today what we're going to be doing is, we'll focus on some of the points that were mentioned yesterday, some of the points that weren't mentioned in the Chancellor's speech yesterday, and probably as important, some of the things that have already happened that as business owners and individuals that are doing stuff that we need to be aware of what those impacts are going forward. So plan for really the conversation is that myself and Mark have got a few topics that we want to go over that we'll discuss as we go through. But also there is the option for those of you that are familiar with Zoom, we've got the chat box. So if you've got any questions, I'll be keeping my eye on that. So do feel free to interact and put stuff in there because it'll be great to add to that conversation that we'll get going. So without further ado, I'll hand over to Mr. Barrett for his first topic of the day.
Okay, well, I'm doing the introduction, so I'm afraid you've got me as the sort of summary of what did I think about that yesterday. Trying to agree how much I can swear during this meeting, and we've agreed I shouldn't. So underwhelming, I think, was the key phrase. And the one that really gets to me is fiscal drag. Now, you've all heard of fiscal drag, but hopefully you all know what it is. But if you don't, I'm going to try and explain it. Fiscal drag is where changes are made, or not made rather, which pull more and more people into taxation, or more and more people into higher rates of taxation. And there's been a lot of that over the last few years, and we're paying a lot more tax. I think the tax rates that we're now paying are the highest they've ever been in our country. So think about fiscal drag. Income tax bands have not increased. Therefore, you're not getting more income at your 20% or 40%. The VAT band hasn't changed since 2017. More businesses are being dragged into VAT. We've had changes to dividend tax. So the tax relief that we get on dividends has now been cut and cut and cut to almost nothing left. It's just constant. CGT allowance gone, or almost now fully gone. It's going to be almost nothing in future. Fiscal drag, terrible, and it's affecting us all dramatically.
Because there were some interesting figures, weren't there, around, like, say, if we use the income tax threshold as an example,
yep.
Freezing those, was it something like 45 billion a year that raises an extra revenue?
Yeah, and we got all these wonderful announcements about super things he's going to do, which don't really benefit any of us as small business owners. Yeah, so that was going to cost, I think it was 9 billion. Yeah, but he's already taxing us by another 45 anyway.
Yeah.
So, yeah. So fiscal drag, do not, I'm sure none of you are unwise enough to think that that was a good budget. Sorry, it wasn't meant to be an autumn. Oh, do you remember the days when they said we're only going to do one budget a year and we'll do an autumn statement to give an update on how the economy's going? Wow, and all of a sudden 110 announcements apparently yesterday. So do we call it the autumn budget or the autumn statement? I think it's an autumn budget, but yeah, underwhelmed and not happy. I've got lots to say later. But
yeah, so there are obviously some headline numbers, weren't there, that came out of yesterday in terms of the typical thing that there are headline grabbers, aren't there? So probably most notably, obviously, increase to national living wage from April, so that goes up to £11.44 an hour. So I think on a full-time person, that's roughly around 24k a year. I think it equates to on a 40-hour working week.
Yep. So I'm going to be the miserable one in all of this, guys. Do you know I'm going to be? Sorry, I'm going to interrupt you.
Good cop, bad cop, we'll play.
Yeah, it's announced a wonderful increase to the living wage. Who's paying it? The government isn't paying that. We are. We're paying that. Businesses are paying that money, not the government. So whilst he announces it and says how wonderful it is, he's spending our money. Sorry, Daniel.
Yeah, no, there's a fair point. And the thing with it, again, just to complete on that, is actually now that does extend out over a greater age bracket now as well. So I think that now extends to 21 and 22-year-olds, where previously it kicked in from 23. So there's a double impact of that. And obviously the increase potentially for that, the employees that fell within that 21 to 22-year-old bracket is way more than the 9 point something percent that it works out to, in terms of the current rate with the levels it's at. So that comes into effect from April. And Mark makes a really valid point here, because of, again, as a small business owner, one of the key things is about forecasting for how can you afford that without your income being affected. And we all know that probably means price increases, doesn't it, across businesses in terms of watching margins and so on, in terms of what they're doing. So because of now, you are going to be squeezed at both ends. Well, I'll have a bit of negative moan here now, Mark, as well. Because we've also got, for people with trading offices, limited company, April was the kick in of the new corporation tax rates as well. So we've got this graduated bracket between 50 and 250 as the rate quickly creeps from 19% up to 25%. So already, if you're paying, income from dividends, it is still tax efficient to do it that way, even with the allowances and even with the cut in national insurance. You're getting squeezed at the bottom as well. Anyway, so squeezed at the top in terms of what you need to do with pricing and margins, and at the bottom in terms of the tax that you ultimately pay on that profit as well. So forecasting around your numbers to impact this, obviously we've got, we say we've got until April in terms of doing it, but actually that work should have started now, really, or we're going to start now, in terms of making sure that you're in the best position to not be reactive.
Absolutely. There are so many small businesses. You just think of your shopkeeper. Every single one of us hopefully goes into local small shops and doesn't just do everything with Amazon and Ocado. The people in there are earning a very small income. They're getting taxed heavily, the owners, but the employees have got costs increasing. The employers rather have got costs increasing dramatically. I know we're going to talk about national insurance in a minute, but obviously the national insurance paid by the employer wasn't changed.
No, it stays the same, 13.8. So it's, again, it's a big chunk.
Well, taxing companies because you dared to employ anybody. How terrible is that? We're actually taxing employment now at 13.8%.
Yeah.
Just where's the sense in this? Sorry, I'm on a roll. So
I think for me, I didn't understand in terms of the way that information was delivered yesterday was the national insurance cut was focused with the lead up of it to support entrepreneurs. I say to support entrepreneurs, I think it's the employer NI that would have been cut to be able to bring costs down if that was going to be it. An increase, a decrease rather, in the employees' national insurance does put more cash in their pocket. Yes, we just went through terrible economic times, and we're still in terrible economic times. Food banks, we're all seeing it. People need the money, and I'm cool with that. The government created a rod for their own back, and they've kept the rod on their own back now. They've created the triple lock. They're not going to do anything to the income tax rates. They're not going to do anything to the pensioners, etc. Cool. They've got to get the money from somewhere. Guess who they're going to get the money from? The only people they didn't promise anything to, and that's the employers. Extra cash in individuals' pockets means they might spend a bit more money. Therefore, our businesses might earn a bit more money, but when we do, we're going to pay more tax to give it back to the government. So it's just a circular motion as far as I can see. Again, just to wrap up the national insurance, the part of it, so decrease to the employee NI rate from 12% to 10%. It's quite important that kicks in from the 6th of January. So I do feel quite sorry for the software providers. So the payroll software providers, this was the reason actually that they said that they were going to announce more stuff in the autumn previously, but it gave people the lead up until the end of the tax year to adapt to this. So the Sage, the BrightPays of the world, Iris, etc. They've got a lot of tech that's going to be going on now between now and the end of December.
I think they've got a bad Christmas coming up.
Yeah, to make sure that that's all ready to roll out come the 6th of January. So, so there's that. And then from self-employed perspective, we've got the class 4 rate, which was at 9%. That's dropping to 8%. But I believe that's from April. So I don't believe that kicks in from January. And also removing class 2 national insurance, the need to pay that. I do note, however, that if people fall below the lower profit threshold, I can't think of what the actual name is for it. So it's around the 6,500 number. Class two still will exist in some form because you can voluntarily pay it as a self-employed person. So to make sure that you can still get your entitlement to benefits, etc., in the future. So it hasn't actually been abolished, from what I understand. It's just for lots of people, they won't need to pay it anymore, but it still does exist in some form or another.
Yeah, the class two, sorry, and whether everyone realizes what these are, if you're self-employed, you don't work for a limited company, you're self-employed, you have to pay class two. It's the old version from back when they brought in the NHS, etc., that it's your stamp. That was it. For those of you with grey hair, that's what it was known as.
Yeah.
And it then became class two national insurance. It's a small amount, and I rather suspect that the cost of collecting those little bits of money actually are outweighed by the revenue that they earn. So as much as they say, well, we'll get rid of it and that's a real bonus to people, actually I rather suspect it's a cost-saving matter for the HMRC because it's too much of a hassle to collect those £3.
Yeah.
Class four, in effect, what that's done, I think, Daniel, and I think you played with some numbers very rapidly on, and we're not promising this yet, that with the decrease in the employees' national insurance, effectively that's sort of trying to balance up.
Yeah, it was broadly equivalent. Yeah, so just on the couple of the average numbers that they threw out for the employee one, talking about what the saving per year would be for people earning at various rates. I would imagine the 1% drop plus the £180 or whatever it works out to for your class two is the equivalent sort of number on the same sort of level of earnings. So it seems like it's like for like.
Yep. One of the things I always find interesting with these, with the budget, I'm sorry, I refuse to call it an autumn statement, it was a damn budget, is they have to, he has to say what extra money he's putting into HMRC to control us. And interestingly, how much he's put into HMRC focused on making sure you pay the right amount of tax. I think that was the euphemistic phrase.
Yeah, something like that, wasn't it?
Yeah, they've got some lovely phrase that doesn't say we want to screw you, but
debt management capability.
Yeah, okay,
that was the phrase.
Yeah, and that's meant to. So I think he's put 160 million into debt management capability. There we are. There's the buzzword, because he can earn £1 billion from it.
Yeah. Wow,
great. So that's really nice. We've put some more money into the Rottweilers. Excellent.
So the numbers, well, there's something like 550 million next tax year, £1 billion for the next two, wasn't it, in terms of what they expect to generate from extra tax collection?
Return on investment, that one. We're all businessmen. We all work on ROI. That was a good return on investment. $2.5 billion. How much you got to spend?
Yeah, I think an important thing with that as well, Mark, to focus on for people is that from when was that? I think it was the back end of last year, certainly maybe at the latest, the beginning part of this year. Was that revenue isn't going to relate to COVID related measures because they closed the book effectively on what they were doing around recovery of like the self-employed investment income support schemes, furlough, etc. So that's just your traditional taxes. So that's not any scheme that's been there before, any support that's been there before. That's just what they expect to get from people.
Yes, absolutely. That's new money, not old money.
Yeah, that's just some scary numbers there potentially, isn't it?
Yeah, well, obviously they're still trying to collect some of that COVID money. I know we're all up in arms about the amount of waste that was there. I still have respect for HMRC that after however many hundreds and thousands of years of being tax collectors, they then became very rapidly relief providers. You've got to respect that they can turn that machine around, and they did. Badly, probably, but could any of us done any better? No.
It was quick. Things like furlough in particular. Was it something like 6 weeks or something, wasn't it, between it being announced and having a system in which you could enter the information and get a payment as an employer? So,
I've got to respect that. Yes, there's been fraud, huge amount of fraud. Yeah. Could they have stopped it? Yeah, by not giving anyone any benefit, and therefore would have moaned about that. So I'm not being as bitchy about that as I might be about other things. What's interesting though is to see what's going on through the liquidations. There's an off topic, nothing to do with the budget now, but Daniel and I talk about this on a fairly regular basis. The number of accountants who were recommending to people, form a company, don't worry about it, we'll claim £50,000 bounce back loans for 6 companies, and then you can just close the company and go into liquidation. The liquidators are tasked now to collect that money in.
Yeah.
So there is action to get that money in, but it's coming through a different method now. So
yeah, it's quite interesting, just because again, it's been, like I said, it's been a topic of conversation for a good few months now. Is that I've heard that people speak to the bank. The bank are quite relaxed about it because their debt is 80% backed, like in terms of like the bounce back loan. So their loss isn't as big, and actually they probably factored in some loss.
Yeah.
So therefore, then people think, well, I don't need to go through a process in terms of closure and try and go through a simplified thing. And it's actually the British Business Bank that was the ultimate moderator, I guess, in terms of coordinator, whatever you want to call them, for the bounce back loans and CBILS, are the ones that then object to the closure.
Correct.
So you can't just get away from it.
You can't just walk away from
it. As much as the bank might say different.
Sorry, that's unrelated to the autumn statement, but there's another £1 billion of our money they're going to screw out of us somehow with this collection process.
Capability. Capability.
Doesn't that sound?
I like it. It's quite a buzzword, quite a buzz phrase, isn't it?
Quite a nice buzzy word, isn't it? Oh, we have a capability. Excellent. Yeah, good. I'm paying. Don't worry.
That probably leads quite nicely on to probably the stuff around IR35, Mark.
Yeah. Okay. Hopefully you're all aware that as a firm, and hopefully you're aware of why. And if you're not, speak to Dan or me. We'll explain why there are these specialist teams. One of our specialist teams looks after contractors. So this is an age-old thing called IR35, and the new thing which is called off-payroll working. The change that's been agreed in the autumn statement was so damn obvious, but thankfully it's now been agreed. So if there's property people or whatever else in here, just bear with me for a minute. What was happening with the off-payroll working is that the end client has a responsibility to pay the tax of the worker if they're deemed to be inside and haven't paid their tax, but the worker's also getting taxed. So in other words, out of the money that a contractor is earning, the Inland Revenue can collect tax twice, and they don't offset one against the other. So now income is suddenly hitting 65-70% taxes because 2 people are being taxed for the same money. Finally, they've got the offset working. That's going to come in, but it is backdated, I think, to 2017, Daniel. I think when off-payroll working started.
That rings a bell, that date, yeah.
So it is coming in, but if you've been hurt by it previously, please reach out and let's get that sorted out, because we can now get the offset working. All right. Is it a great giveaway by the government? Of course it isn't. The buggers are taxing the same money twice, and all they're going to do is to say, well, we'll only tax it once then. So it's not a great giveaway, but it's cash in our pockets if necessary. Okay. If applicable, it's cash in our pockets. So please reach out if you're affected by that. That's for our IR35 and off payroll working. Come and talk to the IR35 team. So I think that was quite, I'm pleased it's in place. It's a massive anomaly. It was so unfair.
Yeah.
And there's so many unfair taxes that, the loan scheme, you all know, any of you on here should be know who we are and know our attitudes towards schemes. The loan scheme, we never agreed with it in the first place. And yes, we've actually seen people committing suicide because of the loan scheme and the taxation, and how to repay that taxes. Thankfully, that's getting under some control as well. So it's a slight benefit. So that's about it for the IR35 guys. There's not a lot else, I don't think.
I think just building on that, the scheme perspective, Mark, obviously in terms of some of that focus under that debt management capability money, so I assume was also focused on people that do promote schemes and avoidance and stuff as well. So we know that there is a a naughty list, isn't there, that goes round in terms
Oh,
of
but yeah.
companies that get
So,
added to that on a regular basis.
so what did we not see? We did not see regulation of the umbrellas. We did not see regulation of MSCs, service companies, managed service companies. We didn't see that regulation being implemented, and we really do need to see it.
Yeah,
there's a lot we didn't see, but I'm not being funny. I think we're pretty used to that with our government, aren't we? That we're used to seeing them make lots of announcements, but actually not really say a great deal. But anyway,
yeah,
they haven't said anything about that either.
no. Okay. I know when we were chatting earlier this morning, Mark, that you mentioned an interesting stat that sort of links back into that employment part in terms of SMEs and the role that small businesses play in that employment structure within the UK.
Yeah, I was fuming. Sorry, can you guess that I was fuming when I watched the Autumn Statement yesterday? It stood up and talked about, if you spend more than £1 million a year on assets, etc., then you've got some tax relief. That's great. And all the names he quoted were all, Uber-sized companies, massive companies. Great. 61% of all the people in this country are employed by SMEs. We are the main employer in this country. We are the engine room of the country. People listening to this presentation. What has he done for us? Nothing. And actually, of that 16.9 million people, I think, Daniel, right?
16.4.
Oh, look at that. Yeah. You can see when he looks down that you know he's going to correct.
I took some notes, just
yeah, he's going to correct. I think it's 12.9 are actually employed
12.9,
in small businesses. We're not talking about medium-sized enterprises, small. Employ 12.9 million people. That's so we are.
Wasn't it? 16.4 represented 61% of the people that are in employment, wasn't it?
Yep.
So,
yep.
Pushing on to that sort of
2/3 of all employment is through us, people on this webinar.
Yeah.
Yeah. I've also got the chat box open. Don't forget, if there's any questions you've got, put them in there and we'll share it with you. We will come back and answer those for you. So the 13.8% we're paying on the employment tax, employers' national insurance, is dramatic. It's a real earner for them from us. I don't think as SMEs we actually got anything out of that budget. I'm not sure that Daniel thinks differently to me.
No, I don't know. I don't think that. I think there was a big void in terms of what makes up a lot of, like you say, trading businesses effectively. Obviously, a lot of our client base that fall within that bracket in terms of what that looks like. So I think it was important to note really that when you now start to see some focus on employee taxes dropping with the NI, the self-employed taxes dropping with it, is that with all of the changes that have happened over the last few years in regards to dividend rates, corporation tax rates, etc., in terms of what's there, is that people will often maybe focus on what that tax squeeze, I guess, is in terms of trading as a limited company versus trading as self-employed.
Yeah.
And it's been a big topic for clients I've been speaking with. They start to question it. Start to question how they take their money. Should they still be trading as limited? Should they go limited if they're self-employed and so on? So it's been a hot topic for quite a while.
Yes.
In terms of what's there, and it's important to consider really like what the next step is in terms of maybe some of the other reasons that why you might be limited in terms of what that longer term planning is.
Yep.
You've got a good phrase for it, Mark, is it? Don't let the
tax tail wag the dog. Do not let the tax tail wag the dog. You can look at your tax rates and say, well, am I going to be 50 quid better off doing this or doing that? Yes. Look longer term, please, folks.
Yeah.
Yeah. We've got IHT planning. We've got inheritance planning in terms of moving your business on. We've got the significant advantages of, do you want limited liability as an owner of a company? Yes, of course, you've still got some liability as a director of a company, but there are lots of things to consider. And I know we've covered that in one of our videos, which is probably one of our most popular videos on the channel, which is structuring your business.
Yeah.
And we've covered a lot of those topics in there.
Yeah.
particularly if you're an overseas investor in the UK and expat tax advice's clients, if you're listening to this presentation, you'll still be well advised to think about your the use of the limited company rather than doing things in your own name. It depends if you're being entrepreneurial or whether you're just doing a little bit of investing. I suppose there is a difference there.
Yeah.
So that distinction is pretty important. So I think one of the things that I'm going to go change subject. One of the things that I thought was quite good from yesterday was the embedding of the VCT and EIS schemes, because they were always looking at these as being temporary changes that were being made. But I think they've now embedded them until 2035. So it doesn't affect us that much as SMEs, but there is some advantages there.
Yeah. Again, I just, this isn't so much what was said yesterday, but again, I think it's an important thing to mention is often in terms of the way that the UK tax system works is to be able to get relief, you need to spend money.
Yeah.
So whether that is the fully expensing for your capital allowances within your business, whether that's making pension contributions as a business or as an individual, whether that's doing EIS and VCT. So you have to have spare resource to be able to get the relief. Yep. And it's a topic of conversation I have with clients all the time around it, is actually you can be more tax efficient, but you personally need less to be able to be more efficient.
Yes.
Or you need to earn a lot more, your business needs to function more to generate that extra income over and above what it is that you need as an individual or as a household in terms of doing all of the things that you want. And I know that people that talk to me will be bored of hearing me say it, but I do work through those three levels with people in terms of that planning around what they do around their tax, both from focusing on a company growth point of view, also then a tax forecasting point of view in terms of having that plan there. I think that is a video that we've got on our YouTube page, which sort of focuses on that. I post quite a lot about it on LinkedIn, etc. But again, with some of the bits that we've chatted about previously, so the increase in staffing costs, increase in tax and so on, it becomes more and more important to do that bit, because ultimately, as most of the people that have signed up for the webinar and ourselves, we're owner managed businesses. If you make less money, it's your pocket that will get hurt.
Yeah,
is ultimately what's there.
Yeah. Sorry, let's just see a comment coming in from Luke there. We'll answer you in a moment, Luke Townsend. So we'll just go on to some bits relating to property now. Would that be?
Yeah, that'd be good. Yeah.
A lot of property investors in our client base with our company Property Tax Advice. So what changes were there for us? Not many, but there are some, and I think it's worth paying attention to them. First of all, SDLT. There's no change to the core rates of SDLT, but the increase in the thresholds that happened previously was meant to be a temporary increase, but the date of the temporary increase has been pushed back, right? Pushed into the future. So it's now January 25. Okay. January 25, the thresholds, you can now expect the thresholds to drop again, which will increase your SDLT bills. What are we expecting? We're expecting to see our clients having that mad dash. Do you remember the mad dash we all had?
Holiday period, wasn't it, during COVID? Like in terms of reduced
mad dash. Let's get this through. Let's get the solicitors doing it. But we all know the solicitors aren't being super quick at the moment. I get clients telling me that they're not going to invest now because they're worried about the interest rates. Well, the interest rates are not at high levels; they're at normal levels. Are they ever going to go back to where they were at effectively almost nil? No, they're not. But you will be seeing an SDLT increase if you don't react by March 25. Okay, I think that's a fairly sure-ish bet.
That increase could come down from squeezing the bands back, couldn't it?
It's going to squeeze the bands. You're just going to move the band back down again.
Yeah.
They had this temporary increase in band for first-time buyers and for all property. Now we're going to see the bands come back down. So it's going to be back into that fiscal drag, move the bands, and you drag more people into tax or higher rates of tax.
Yeah.
Another one for the developers is, and it's one that I have to deal with all the time, that people who are buying, renovating, selling, or building and selling, you are developers, you should be operating CIS. Thanks, Gary. We'll come back to you in a minute. You should be operating CIS, and if you don't, you get smacked quite severely. One of the things that you have is what's known as the gross payment
scheme. Yeah, gross payment scheme for CIS.
That's for limited companies who are not naughty boys. Okay, so if you pay your taxes on time, you always get your filings done on time, etc. You don't.
And a certain level of activity, so it is above a certain amount.
It is above a certain size, so it is.
Yeah, CIS
and you've got to be 2 years in existence, and you've got to do it for 2 years, etc. Then you don't suffer CIS deduction. So your cash flow's slightly improved, or significantly improved. Massive new level of attack now on checking, are you really a good boy or not? So the amount of taxes that now come in, it's VAT, is everything. And you're going to have a 6 months check, you're going to have a 12 months check on all of your status. And then effectively, I think that's going to push some of your main contractors. I appreciate that most of our clients within property tax advice are the developers themselves rather than the contractors. Of course, we've got contractors within the client base. It's going to push more of your contractors into suffering CIS at source. So you've got to be the unpaid tax collector. You've got to deal with it, but the contractor is going to suffer cash flow problems.
It's an interesting change though, Mark, isn't it? Because of within the construction industry, they obviously bought in that the reverse charge for the VAT. And effectively the impact of that was as well, I'll push the issue to the top of the chain, so that from a HMRC perspective, if you've got 7 people operating in the supply chain, actually it's only 1 that you need to really worry about in terms of collecting your VAT revenue from.
Yep.
And we saw clients, initially it impacted from a cash flow perspective because people were using their tax to help their cash flow, i.e. VAT being part of that. And it sounds to me that this potential with the gross payment scheme monitoring of it is, well, I'll reduce down the number of people that I need to look at and maybe I'll push it to the top of the tree. But it's the guys in the supply chain that will suffer because of now they've got the administration burden that maybe wasn't there before in terms of the reporting and so on.
And the cash flow impact on the guys at the top of the food chain. So our clients.
Yeah. Because
your contractors are now saying, I want bigger deposits because I've got to pay more tax out in cash. It doesn't affect the total tax bill, but it affects the timing. So they're going to be pushing for the clients to hand out more cash on deposits. And I think the reverse charge scheme had the same effect.
Yeah.
Sticking with property just for a couple of minutes. I love the idea that they're going to consult. Please note the word I've emphasized, consult, on whether you can split a house to 2 flats under permitted development. Yes, we've got a housing shortage. Absolutely great. Do you think the local councils are going to frustrate that? Do you think the local planning office is going to say, oh, that's fine, just do these things without consulting with us? Do you really think that's going to happen? So yes, we've got a consultation to go through, and then we've got the implementation, and then we've got the frustration of it. Personally, I'm a bit wary of it. There was an article we've posted on the PTA website about that this morning. Please go to the PTA website and have a read. It's a good article. Wasn't written by us, obviously. We're not planning consultants. Ian Walmsley. I've stolen one of his shares. So I think the final one for the property guys is the trying to get the planning department to react quickly, which is if they don't react within prescribed period, that they have to do the work free of charge and reimburse your planning application costs. Do you think they're not going to find a way to frustrate that? Oh, it's not a case that we delayed, you didn't answer this question.
But we see that already, like from our perspective. I know that's on a planning point of view. We see it from maybe a taxation point of view, is that there's a prescribed limit to respond within. But if I ask a question on the penultimate day, then it restarts that clock anyway, doesn't it? So just make sure you ask the question at the right time to be able to get yourself more time, isn't it, effectively?
Yep. Clients who've gone through what we call the amalgamation process, where you've got an HMRC clearance, you've got a 30-day response. This is exactly what Daniel was talking about. You've got a 30-day response. Guess what? 28th day, they haven't looked at it. So they ask you a question. That resets the clock again from the date you answer. Do you think it's going to happen? I'm jaundiced about how our government and how our bureaucratic system works in this country now. Getting worse. Sure. So there's my miserable topics for property tax advice. There's some possibility of a tax in the future. You might need to react sooner, but otherwise it's just consultation and planning.
Yeah. Just whilst we're talking about property stuff, Gary's put just a point in the chat box. It says not so much about the interest rates, but the rental income calculations and stress rates that the lender applies. So again, it's a further squeeze, isn't it, on people in terms of trying to meet that criteria to get the lending that they need to be able to do what they're doing.
Well, it's interesting with the PRA, the Prudential Regulation Authority, because it's only guidance. Nobody has to comply with it. It's guidance. But guess what? Everyone can, all the lenders will use it. Yeah. So it's a very easy mechanism to squeeze money out of the system, is to change the PRA guidance.
Yeah.
We see it all the time with the surveyors, don't we? The surveyors are undervaluing property and downvaluing. So yeah, it is a tough old market that we work in, but that's why we're businessmen. That we do these things so that we can run our own business.
I think always the point, and I know obviously clients that are on the call will know that we stress on this as well, in terms of actually it's that longer term planning part, the long term objective of what you're trying to do. And I really can't emphasize that enough, because of, again, with any business, I think you can go through you might suffer short term pain, but the long term gain's got to be the thing that's the win there, hasn't it? So
it is.
Interest rates changing, taxation, employment issues, sales targets, whatever it might be. That is all part and parcel, isn't it?
It is, yeah. Well, yeah, it is. You have to do planning. Hey, folks, you've got to do planning, and that's why our holistic care process that we work with all of you is so important. You've got to be focusing on getting it right on the planning side. But yes, I'm not feeling very happy this morning after that autumn statement. A phrase that a lot of you will be used to. I think we prosper as businesses despite our government. They keep throwing as many obstacles as they can at us, keep taxing us, but despite them, if we do proper planning, we succeed. So
yeah, good.
Miserable, but I know it's
it works perfectly, Mark. Works perfectly.
Yeah.
If I look like the cheerful one, it's I shoot it. Okay, and then we've got a question from Luke. Is it standard operating practice to squeeze the middle? Is this likely to change? I think it's standard operating practice, isn't it, to squeeze the middleman?
I'm miserable and I'm jaunted about all this. Do I trust our MPs? No. Why are they always protecting the big boys? Why are they always doing that? Why are they always looking at the smallest employer in the country, the guys that employ the fewest number of people? Why? Don't know. Are they donors or something? I don't know. What is it? Why are they looking after their mates? I don't get. Maybe that's where they want to go and get their chairmanships afterwards. I don't know. But it's certainly, I think we are surviving despite our government. I think they're always going to squeeze the middle.
Yeah.
What is, go back to the days of Napoleon. More phrases from Mark, more analogous language. What did Napoleon call us when Battle of Waterloo? Not saying you can remember it, but at least you read about it. What did he call us? We're the nation of small shopkeepers. We've been entrepreneurs forever. This is what we do. We run businesses. We look after ourselves, despite our government. So yes, I think they're going to be squeezed in the middle forever, Luke. Grow, become bigger, and you can survive it. All right. Plan your business, get your profit rates of profit right. Look at how to look after you first. Daniel and I see it all the time. We see people who start a business, they go, "Hey, I'm a director. I need a Porsche." No, you don't. You really, really don't need a Porsche. Your Mondeo was great. It got you from A to B, and it was a nice car. But we see people who aren't sensible entrepreneurs. Be sensible. Plan.
I think they say it's the plan, isn't it? It's the plan part. I think is so important because, again, I sort of work on the basis, and again, clients will have heard me say this. Same story really that gets told, that actually sometimes as a business owner you can be prepared to take the step back in anticipation of growth.
Yep.
But you need to have the plan to know when it is you're going to go past the line that you started at before you maybe incur those extra costs in terms of whether that's staff, marketing, stuff.
Yep.
Otherwise, if you're not careful, and again, I've seen this error so many times, is that you incur all of these extra costs and you don't see, you might see growth in turnover, you don't see the growth in profit. And ultimately, again, like I said, as owner managed businesses, profit is the key to how you get paid and how you live your life. So, the focus has to be on it.
Yeah, that's the old phrase, isn't it? Profit is sanity and turnover is vanity.
Yeah.
Absolutely. Can I go off onto a quick tangent, folks? VAT-free shopping. What difference does that make to us? Well, actually, it makes a hell of a difference. The amount of people coming into our country, whichever city, obviously people think of London, but it isn't. It's nationwide, who are coming from abroad and spending huge amounts of money. They're staying in our serviced accommodation. They're staying in our hotels. They're staying wherever. They're eating in our restaurants. They're spending huge amounts of money. We cancel VAT-free shopping for them. Now, every other country still got it. So I've shared a personal anecdote with Daniel about this before. I've been in shops in France where my wife has wanted to buy a single handbag, and I see Japanese people in there with video cameras, etc., wheeling and dealing and buying on behalf of others and walking out with tens and tens and tens of thousands of handbags. Good. That's great. So France can have that business now, and Italy can have it. You can go to Rome and go to Paris, but it can't come here. What has our government done about it? Yeah, we're going to continue thinking about it. That would be nice. We're just going to continue thinking about it. But it's another part of fiscal drag because, of course, we used to have VAT-free shopping, and it was on every one of your shopping centres. But now we don't. So that's extra revenue. They've got that money. They don't want to hand it back anymore. Mm-hmm. So I think that one is really damaging. And if there could be any pressure applied to get VAT-free shopping back in this country, I think it would be a great boon for us on our balance of payments as a country and us as businesses.
Yeah, I completely agree. Just had another question pop up from Nick. Did I hear something about super deduction relief continuing? Unfortunately not, Nick. So super deduction stopped as of March 2023. What was brought in place and yesterday was effectively announced that it was going to be extended out was what's referred to as fully expensing. I've got to be honest, this is my time to be grumpy about this, it's a bit of a nonsense, really. Annual investment allowance was already there.
Yeah.
And for lots of small businesses, the cap has varied over the years, but we're talking like, I think the lowest it got was like 100,000 in a year. It went up to 250. I think it went up to 500 at one point. For most small businesses, because of the fully expensing doesn't relate to buildings and property and stuff like that. It's your plant and machinery, it's your kit, it's your desks in your office, it's your computers, it's your servers, it's obviously there's some relief around some other bits and pieces, but it's not, for most small businesses, they're not spending that level of money, so they already had that same level of relief under the existing rules that were there. So who it really does benefit is where there have been caps and people have been spending more money. It's your large businesses, people that are kitting out factories and spending millions of pounds worth on the factory to get it kitted out. So
when Honda buy a new factory and they kit it out, Honda are going to win. That's excellent.
Yeah. So yeah, super deduction unfortunately is gone. I'll be honest that if you watch the previous webinars that we had when super deduction got brought in, I was quite cynical at that point as well, because of effectively, in my opinion anyway, it just brought forward spending, which is obviously what the government wanted to do to try and get the economy moving and get people out and spending money. Because actually the relief, if you then fell into a 25% tax rate, was the same anyway. So it was timing, wasn't it? In terms of before that corporation tax rate came in, it just sped up that money, didn't it, being spent effectively?
Yeah. Okay, I think there's one more topic we really need to cover, and that's R&D. And that is important, but it's...
I do have one more.
Okay.
Mark, if we could. Is really focused. This is on a bit of a compliance bit for people, but more focused around people who need to do self-assessment. So previously the rules were if you earned over £100,000, regardless of where your income came from, you would fall under needing to do self-assessment. They raised that bracket to 150 for the 23-24 tax year, so the current year that we're in. And they've now announced that if your only income is from PAYE, so a high earning employee, and you're earning over that level, then you won't need to do a return. So that sounds like good news. Lots of people get pulled out of self-assessment by doing it that way, and simplified tax and all those sorts of things that have already been said. But we also know that some of these allowances and so on have reduced, haven't they, in terms of dividends that you might have on your share portfolios, interest that you might be now accruing if you've got some cash savings because of the interest rates have been better if you're now saving. You still might fall into a bracket where you need to pay tax. And I always find this one, I am boring when it comes to this, but I find it interesting that actually the thresholds don't match the criteria for who does and doesn't need to do a tax return. So thresholds are much lower. The who needs to do a tax return is much higher. So you fall in that gap. So how do you tell HMRC if you've earned above £500 worth of interest as a higher rate taxpayer if you're not doing self-assessment? So you either have to notify them yourselves and try sitting on your phone line for 45 plus minutes to try and speak to somebody to get that information updated, or via maybe your personal tax account, which is still in beta if you look at certain parts of it, so still not fully functioning. Or probably more scarily is, what we spoke about a lot, is HMRC Connect. So HMRC's system of going, well, I already know a bit about you anyway, and I'm going to start to build that profile. So banks might share some information with me, insurances might share information with me, obviously your employer shares it, your pension shares it, and what you're telling me. So don't be surprised if you fall outside the need to do a tax return and still don't say anything to HMRC, that you might have one of these calculation letters hit your doormat to say, well, we think you've earned X amount of untaxed interest and therefore you owe X amount of tax. It puts you on the back foot a little bit, obviously, because if that does tend to happen maybe 12 to 18 months past a tax year, typically, from previous experience.
Yep.
So it can come at a time you don't expect it. So there still can be benefit of doing self-assessment, even if you fall outside of that criteria, if you think you've got that type of income because you're on top of it, or you need to be actively doing something to tell HMRC about that yourself. So I think that's one area. And just because the topic that comes up, so I know it doesn't affect everybody that's on the webinar today, but I think it's important to mention that state pension increased again, or announced it's going to increase again. I think it was 6.7%. I think it was something like that around it.
I thought it was 8.7, but
yeah, it might be more than that. Yeah. So again, we often see that people are confused about how your pension gets taxed or state pension gets taxed. And it isn't paid, it's paid to you gross. It doesn't have tax deducted at source. But the way that they adjust for tax that you might have to pay is via your tax code. So if you do have other forms of income still, or still receiving your state pension, you will notice that what you get from those pensions will change potentially. If state pension is now using up a much bigger proportion of your personal allowance, that's going to fall into that basic rate tax bracket potentially in terms of what you're doing. So just be aware that if you do receive, this from April, You may have already seen the impact of it, because I think the state pension did go up in April this year. So just be aware that when you get your payments through from any other sources, is that you might notice that the take home is different. And that's how it's adjusted for. So just something to be mindful of in terms of a basic compliance type thing.
Great.
Okay.
Can I preface R&D now?
Yeah. We'll finish up on R&D. Yeah.
Okay. Well, let's finish on R&D. Don't want to see all of you click off now because you think R&D doesn't apply to you. It can and does. We see too many people who don't think R&D applies. It does apply. It can apply to an awful lot of businesses. They've really tightened up on claiming. And that's one of the things that I know Daniel's going to now talk about. But just so I can get one of my worms out on the table, you got so many scheme sellers out there, people going, oh, you know, if you ever paid SDLT, I'll get you the money back. If you've ever, I'll claim you £100,000 worth of R&D. And these people are unregulated and they're just selling stuff. It's not real. Engage with professionals like Dan, Paul, me on this. But R&D does apply to small business. So Dan, explain what we're doing on R&D.
Yeah, I think from now, just on Mark's point in terms of people that get contact, I just want to tell like a little bit of what I think is a horror story when it comes to R&D and people saying that that you can definitely claim it. So when you go through an R&D claim, but previous to any of these changes, so I'm going to mention about change that's come up this year in terms of how you now have to process your R&D claim.
Yeah.
But previously, you still provided a lot of information to be able to do that. You had to justify under 4 or 5 headings about what it was you were achieving from your project to be able to qualify for the relief. That's very detailed work. So, you want to know what's going on in that project. You want to know the people that are working on it. You want to know the challenges that they've faced and so on, so that you've got this whole record. The horror story that I had was that, well, actually, a client got contacted by another company saying, well, I think you can claim R&D. Okay, that sounds good, because it's going to sound good because of great, government wants to give me some money. So it triggers that reaction. Okay, I'm going to get some money. Why wouldn't I look at it? And all they asked no questions about what the business was doing other than the type of business that it was. They literally took what was coded within their accounts under IT and software expenses and multiplied it by the rate of the relief that you get within your R&D. And then go, great, you can get 10 grand back, of which our fee is X amount of that. So from a client perspective, they go, well, that's win-win, isn't it? Like, that's money I didn't have and I'm paying you out money I didn't have. There's no detail there. And then as soon as a question gets asked, that company disappears. Okay, so just be mindful, because even within the role that I do, I probably get contacted once a day, I think, by R&D companies trying to sell me R&D claims effectively. So be mindful, as a business, you will have those contacts as well. As I said, there's been some changes this year that actually now, I think 8th of August, I think it came in this year, where effectively any claims that are done after that date, you have to apply to HMRC for what's referred to as pre-clearance. So you share all of those details in advance of submitting any claim alongside your corporation tax return. So there's an extra step of vetting what's going to go through in terms of then what that means around the tax relief that you might be due. Obviously, that gives HMRC the opportunity to also reject claims at that point if they want to. But most importantly with that aspect, that if you don't go through that step, and you do include it on your corporation tax return, as you may have done before, and think you're going to get that claim, it will be automatically rejected. Okay, so you have to go through that pre-clearance element to it. What was announced yesterday was that there was going to be a simplification of R&D. Okay, so we already know that there's been lots of focus on it because of people trying to mis-sell R&D claims. That's one element to it. We already know that HMRC throw out more R&D claims than they did before. Okay, so what does simplification mean? And that's the bit that I'm slightly dubious of, in terms of you make it simple, then actually maybe it does stop the people from claiming that could be able to claim. Okay, so I do get a bit worried when you mix a big scheme, which they've got a large company and a small company scheme at the moment. like who's going to win out of that. And I know Mark's mentioned a few times in terms of large companies that were mentioned in the speech yesterday and in the stuff that came out. I do worry what the impact is on small businesses being able to claim that. But if you can, and again, Mark says a misconception that it's just limited to pharmaceutical companies and tech companies in terms of doing it. There's a wide range of companies that do qualify for R&D. So don't think just because you're not one of those that you wouldn't be able to claim it. So it's just something to be aware of. And one of the things that I think we'll be doing as a follow-up to this webinar at some point, hopefully in the very near future, is we'll arrange one of these with our tax manager, Paul Gosling, who many of you might be aware of. And one of Paul's specialist areas is R&D. So it'd be really good to hear from Paul in terms of some of those extra steps and so on that we can go through from a client perspective and things to be aware of. And obviously some of these changes that have already come in and the ones that are going to come in as well.
Good. Excellent.
Cool. So,
sorry, just when we do announce the R&D thing, please don't just assume it is the tech and the pharmacy companies. Let me just re-emphasize that. Have a look at the presentation when Dan and Paul does this, and it might be useful to you. Okay.
Excellent. So I think, Mark, that was all of the topics that we sort of took from yesterday, and obviously quite extended out in terms of quite a lot of stuff that had been previously announced. What I will do for everybody, I know lots of you will have received it already, but I'll do it so that you've definitely got it, is I'll send out our statement analysis that we've done for clients to the attendees so that they've got that. And now is really an opportunity. We've both got some time. So if there are any questions, I've just seen that one has popped up, I think. If you've got any questions, then we'll be pleased to sort of go through those bits now. Obviously, if there's anything specific to your individual requirements or things that you think that might impact you, obviously, if you're a client of ours, reach out to us, speak to your main point of contact. We'd be more than pleased to help. Likewise, if people aren't clients, then it will be great to hear about what your situation is and again, maybe how we can help and what we can support people with going forward as well. So if you've got any questions, we'll hang around for a couple of minutes to see if anything else pops up. And then we'll close off.
Great. The question that was posed up on the Q&A was actually a thank you from Luke for a great session. Thank you, Luke. Thank you also Barbara, who I know is gone, but we'll be listening to the recording for her nice comments as well. Thank you very much indeed. If there's any questions, we'll deal with them. Oh, and Andy's thanking us. Thank you. And Gary, thank you very much. Yep. Yes, Gary, you're on a list, matey. I'm back to you shortly. Great. In which case, Daniel, I can see that participants are beginning to drift off. If there's no questions,
we'll call it a day, I think.
We'll call it a day. And how about that? We got it done in 2 minutes earlier than we said we would.
Excellent. Good.
Okay, Stephen, I happen to agree with. I think was positioning for votes. Okay. Daniel was trying to persuade me not to be political. Stephen has now thrown up the ball ready for me to. Okay. How many people are employed in this country? Let's say 30 million. Give them 2% off their national insurance. It doesn't matter how much we hurt the employers because there's actually not that many of us. For every vote that Dan and I might have, we've got 55 staff, so damn, we're outvoted. So make the 53 happy. Don't worry about whether Daniel and I are happy. It's just mathematics, isn't it? Sorry, I know that's really negative, and I know that I've got some of our colleagues on the line as well. Sorry, guys, but that's just the reality. It's all vote grabbing. The spring budget, because I refuse to call this the autumn statement, but the spring budget, there'll be a lot more giveaways. Will there be anything for us? We are now paying the highest levels of tax as a country that we have ever paid. And we're doing it under a Tory government. Now, let's not say who we vote for, but I would tend to vote for someone that isn't going to hurt me. So this looks like a Labour government to me, and I can't. Yeah, I've got the Liberals have gone further to the left. They've sort of taken the Socialists' position. Labour and Tories seem to be stuck in the middle. They can't work out which one of them is more Labour than the other one. Damn, I don't know what the hell's going to happen with the vote, but yeah, I think it's all about positioning for vote winning, Steve. I happen to totally agree with you. And Daniel, it wasn't me volunteering that. I was answering a question.
Of course, yeah, I know. I know you didn't orchestrate that at all. I can see the question. So the question was there. Yeah, great. So I think on the basis that we said, like quite a few people obviously started to float off now. So just to wrap up, obviously we really like to do these webinars. I think they're hopefully clients find them really useful. And they are informative. I like doing them. We like doing them because we chat quite a few things out here, which sort of expand out in terms of what we do as well. But if there are any other topics, so I know we've mentioned R&D is one that we're going to do. We will do that soon, so we'll get that one arranged. If there are any other topics that you think would be useful, so whether that's very industry specific in terms of what you're doing, whether that's very tax specific, whether that's focused around small or growing businesses, then do feedback to us, because we've got lots of ideas of things that we would like to do, but we also want to make sure that they are all relevant to what people want to hear and see as well. So do reach out to us. We are fully ears open to those suggestions, and we'll go from there.
Yep.
All right.
Brilliant. Well done.
Excellent. Thanks everybody for attending.
Yeah. Thanks, Phil.
We'll see you next time.
Yeah. Cheers. Bye bye.
Yeah.